Hey, it's Larry Gonzales with your housing market update for the first full week in December. Tomorrow, Saturday, it is December 7th, the day that will live in infamy, the anniversary of Pearl Harbor being bombed. So it's certainly a big day in the history of America, and certainly on the islands here in Oahu or in Hawaii. A day to remember for sure, and just give thanks to those who served our country on that day and then the preceding days in World War II, and really those who have continued to serve and serve today. Let's get into the housing report. A lot of news this week, and again, another week where we got 3 green arrows across the board. That is a great thing. The numbers aren't really, not a lot of changes, but still changes positive. Prices are still going up, although not a lot. Inventory is up. It's just pretty typical this time of the year, and rates are down 2 weeks in a row. So that's good news as we start this month of December, the last month of the year. All right, let's take a look at the headline news. Not a lot of news that strays away from jobs. This was jobs week, and we have a lot of mixed reports. Even within the reports, there's mixed news. And because of that mixed news, interest rates didn't drop off a cliff, but they didn't go up either. They just kind of went down a little bit. And then we had some Fed heads talking this week. We'll get into that as well. I give it a down arrow because they are not committing lowering the Fed funds rate a lot more, and they're going to take a cautious look. We'll get into that, though. All right, so let's take a look at some of these jobs reports that came out. All right, first we have the ADP employment report. That is the first report that comes out in the week. And the ADP report, that is a private sector jobs report. And that showed 146,000 new jobs, which was lower than the expected 163,000. All right, so that's not good news, or that is good news for rates. But wage growth actually went up for people who were staying in their jobs from 4.7 to 4.8%. And then for job changers, went from 6.7 to 7.2%. So there's that conflicting news. Hey, people are getting paid more. If people are getting paid more, that means they're spending more. All right, so that kind of offset the lower number in the new jobs. But you look at the jobs, most of the hiring was in the large companies. Small companies actually dropped 17,000, and manufacturing companies dropped 26,000. So again, some mixed news there. And that's kind of what we're looking at. All right, then today on Friday, we had the BLS jobs report. BLS jobs report, we had a lot more new jobs, 227,000, which was more than expected. And then we had positive 56,000 jobs for the last 2 months in revisions. And that's largely in part due to the hurricane and the Boeing strike. But so you had those numbers more than expected. But unemployment, there's 2 surveys. There's a business survey and the household survey. Household survey shows a monthly unemployment rate. That actually went from 4.1 to 4.2%. And we're just a smidge off from going up to 4.3%. All right, we're at 4.246. If it would have been up to 4.25, then it would have gone averaged up to 4.3%. Really close to being a 0.2% higher on the unemployment report, which really would have kind of made it absolutely a 100% certainty that the Fed is going to drop the Fed funds rate a little bit in December. Unemployment rate, though, but kind of one of the things that I'm looking at though is that the average weekly earnings dropped from 4% down to 3.7%. Average hourly earnings, that really didn't change, but that's not what we care about. You can get a pay raise, but you can work less hours in the week. So the weekly earnings is what's really important. And weekly earnings went down. So that's kind of opposite of what we got in the ADP report. So again, some conflicting news in the jobs report. Let's look at initial jobless claims. Again, more conflict. Initial jobless claims were up 9,000 to 224,000, but continuing claims were down 25,000 to 1.871 million. So again, positive, negative numbers there. Part of this too is Thanksgiving week was the comparison week, and people ate too much, and then on Friday they went and either they slept or they went and shopping on Black Friday. So those numbers may be skewed a bit. And the bottom line is nobody wants to get fired or or nobody wants to fire anybody, certainly during the holiday season. Now let's take a look at what the Fed folks are saying. Remember, the Fed is going to meet here on December 18th. They're going to make a decision on whether or not to lower the Fed funds rate. And here's kind of what they're saying. Fed Chair Powell, we can afford to be a little more cautious, all right, because the economy is proven to be very strong, at least when you look at the numbers. And then on inflation, we're not quite there on inflation, but we're making progress, and that's what Fed Chair Powell said. So really, that's why they can afford to be cautious. They don't have to drop the Fed funds rate a lot, and there's no guarantee they will if inflation continues to stay elevated and the unemployment stays kind of where it's at, or the economy continues to prove to be strong. And you see the economy strong, companies' earnings reports in inflation and in spending. But you also have Fed Chair Fed Board Member Waller saying he is leaning towards a rate cut in December, and SF Fed President Mary Daly, who's really been hawkish for much of the last few years, saying, you know what, she supports lowering the Fed funds rate in December. So some news from the Fed that really just basically says, you know what, expect the Fed to cut the Fed funds rate in December. Now, just know, next week, though, week before the Fed meets, all right, we're going to have an inflation report, or 2 inflation reports coming out. So that could, skew them to 100% certainty, but they might say, maybe we hold off on this Fed funds rate cut, but I do believe that they'll probably cut the Fed funds rate. So let's take a look at the VA rates. Mortgage rates this week are under 6.25. This is average across America today. They are right around 6.2%, so that's good. And we'll see what happens next week. Don't expect it to go down below 6% unless we get a really good inflation report. I think if we get, when the Fed cuts the Fed funds rate, we might see rates go below 6%. But right now, we're in between 6 and 6.25, and really that's pretty good as we end the year. That just gives us some room to go down a little bit as we begin the next year. And again, it is looking like the Fed is going to cut the Fed funds rate on December 8th. So what does this all mean? Well, applications were up again, 6% last week. It's the 4th week in a row that mortgage applications have been up, and that actually is kind of pretty normal for the year because you have a lot of people who are looking to move, and the smart people who are looking to move, they are actually getting pre-approved ahead of time. But you know what? A lot of people, they get busy. They're like, oh, you know what? I do want to buy. They get the app done, and now they're looking. Refinance activity was down a little bit last week, and that's to be expected because rates haven't come down that much. Now, though, is the best time to buy. And here's why, people are putting their house on the market. One, there's more inventory now than really any time since before COVID started, but you have less competition, and the people who are putting their houses on the market now really want to get their homes sold by Christmas or get them in contract by Christmas because a lot of people are moving. This is that second time of the year where people move. School's out. It's a bigger holiday season, so they're going to finish the semester in school, then they're going to move. People are putting their homes on the market now. They want to sell, and they're kind of under the gun to sell, especially if they want to buy somewhere else. So really a good time to get in, get a good deal, and get some seller concessions, whether it's to help you pay your closing costs or to buy down your rate either permanently or temporarily. And sellers, again, it's a tough market right now because you have a lot of people. Like I go down streets and there are 2 or 3 houses for sale on the same street. You're competing, sellers, with these other people. How are you going to win that buyer? What's going to bring that buyer to you? Is it going to be the lower price? Not necessarily. It's going to be the best staged house, and it's going to be the house that has the sellers providing some credits to make the home affordable for the buyer because rates still are elevated. All right, that's all I have for you this week. I hope you have a great week. Enjoy your weekends. Beautiful week in paradise. We'll talk to you later. Aloha.